Let's go across to our conversation this morning. Amit Varma, Managing Partner at Quadria Capital, joining in. Amit, hi, great to speak with you as always. I mean, in times of uncertainty, at least one thing is certain, we can all enjoy our cups of coffee even more, just taking on from the last story. But, is India very clearly, in your view, the market to bet on when everything else is up in the air? Or is that being overtly optimistic?
So, Tamana, thanks again for having me on the show. It's always a simple question for me to answer when you're discussing India and healthcare. And to my mind, the optimism that we demonstrated over the past decade, where we started to invest in a single specialty private equity fund, is now borne testimony by our ability to raise more and more funds for Indian healthcare. So as you're aware, we're coming off a successful fund close of $1 billion for healthcare, of which at least 60 to 70% will go into India. So the short answer that I can give you is obviously we're quite bullish about the growth of healthcare in India.
Okay, so healthcare is where it's looking exciting. And that's a great point to start off on, Amit, because the fact is that Indian pharma, which is very dependent, some of the biggest companies are very dependent on their business in the US, don't know which way the wind is blowing right now.
There is layers of complexity that is attached to this question, especially when it comes to tariffs. And I wish it was that simple to change global supply chains based on just tariffs. This is years of regulatory, supply chains, and what you will see. So yes, there is a lot of rhetoric about the pressure that Indian pharma may face because of US-led tariffs. But my belief continues to be it's a 3-year cycle. There will be some pressures that we will see. Having said that, moving supply chains out from the Chinas or the Indias of the world is easier said than done.
Amit, good morning. This is Hiral on this side. So, as Tamanna was talking about the state in which pharma and the Indian pharma industry is right now, if you have to look at all the aspects that are playing around, the domestic story, you're talking about exports where US tariffs probably could be a concern as well. A lot of things that are brewing, right? Is the timing correct to start investing in pharma right now? Or is it best to just sit with the positions what you're holding?
The timing to invest in pharma was yesterday. So let me elaborate on it. I think there are a couple of sectoral changes that we are beginning to see. There is Indian pharma manufacturing for India, and that market continues to grow a steady 6 to 8% year on year. But we're also beginning to see a huge swath of specialization that is taking place within Indian pharma sector. And let me elaborate a bit on it. Number one, there is this massive CDMO sector momentum. We are expanding from a $16 billion market in 2023 to which we are anticipating to be a $50 billion market by 2013. So it's almost like a 50% year-on-year surge, especially for the kind of RFPs that we are beginning to see as companies are diversifying from China. I think the second trend that we are seeing is the generic pharma stability. So market is again growing at almost a 7% CAGR. It's going to go from a 28 billion industry to a $50 billion industry by 2030. And then you have these newer products that are coming out, for example, GLPs, which is very small at a $120 million market. But I'm just talking about examples such as these, where higher end molecules, which were never part of the Indian market repertoire, are now beginning to come into mainstream. And lastly, there is a lot of portfolio alignment taking place. And you've seen us double down on the sector, not just by our previous investments in Akums or N-Cube, but we've also doubled down now in Aragen Life Sciences, which we believe that this kind of companies will become, with their global clients, will be avenues for growth.
Right. So good avenues of growth. Akum is an interesting one that you mentioned as well. Let's break this down. You mentioned about the GLP-1 portfolio, right, which is the diabetes one. If someone has to look at betting on this portfolio now, which are the Indian companies do you think because a lot of them which are in various stages, right? Which ones would be a good investment bet if you have to look at a 3 to 5 year perspective?
Hiral, I would be in a better position in the next couple of weeks and months to be able to give you that answer, because the data that's coming out from most of the Indian manufacturers is sketchy at best. And it's very hard to answer your question honestly by being able to tell you that the science here is looking better. Look at what has played out in the international market, the kind of drugs that came out with all the hype that started 2 years ago. Now you have clear-cut market leaders based on the molecules. I suspect we will see something similar in the Indian market, but that data still does not exist for me to give you that answer.
You know, I'm just wondering if, apart, Amit, from the pharmaceutical companies, the whole healthcare space is looking exciting to you. Because that very domestic perspective, very big potential upside. How are you looking at that space?
See, the good part about services, and we call it services, which is hospitals and the kind of patient care services, or even diagnostics for that matter, is a local market. At the end of the day, no patient wants to travel. And most importantly, you have to deliver. Thanks to COVID, we've learned we have to deliver point of care. So the historical infrastructure underfunding that has taken place in our part of the world, and even now, your screen is talking about 2.5%. It's not even 2%, I would imagine. There is such a need to continue to build infrastructure over the next decade or two that the sky is going to be the limit. Number two, disease profiles are changing on a continuous basis. 50% of acute infections are still taking place, but we are sitting on an epidemic of chronic lifestyle diseases. Obesity, diabetes, hypertension, cancer, environmental related pollution diseases are on an upscale. What is going to be happening, and that's very important to understand, that if I am diagnosed to be a diabetic today, I am going to be a diabetic for life, which means now we have to create an entire ecosystem to take care of me. So the enormous amount of spend that is taking place there. And the third trend, which is very important, is that the government has decided that they won't be able to create the infrastructure. Even today, 70% of care that is delivered in India is through the private sector. So once the government has realized that they won't be able to provide the infrastructure, they have pivoted, which is the right thing to do, to universal health insurance. And what that does today, it opens out the market for more and more people to come in and get treated.
So Amit, my question coming to you is, you're talking about the hospital capex boom. Majority, from a Max Healthcare to a Fortress to Narayan, these three are the ones which are seeing that massive capex boom for the next 3 years versus what they spent in the last 3 years. Which would be the companies that you would put your bets on?
So first, Hiral, take all of the names that you can think of, and they are not going to be more than 25% of the organized market. So just think of a 75% massive Indian market, which is ripe for growth, consolidation, and platform building. I think the way the capex is being spent is actually being done pretty smartly, because the models are very different. The Apollos are growing in not just their areas of strength, but they've also decided to go to the tier 2 cities. The Maxes of the world are doubling down a lot still on the larger cities, while the Manipals of the world have decided to do a regional play. So it depends on what suits your cup of tea, but I do believe that pretty much all the names, including Fortis here, which I should add, will continue to show growth. It just depends on your capex efficiency. I think one of the metrics that we don't talk enough about in our industry is ROCs. And while there's a lot of focus on bed capacity and utilization and ALOS and revenue inhibitors, I think the ROC should become a discriminator of which companies you want to back.
Thank you so much, Amit, for speaking with us, managing partner at Quadria Capital. And it's amazing to see that faith in the whole healthcare space coming in, especially from Amit.